Tesla taking the biggest hit, down 6%. That's not the only potential headache for Elon Musk. Leaders in Canada are going after his ventures specifically.
Tesla just lost everything, and nobody saw it coming this fast. In less than 90 days, Elon Musk's electric vehicle empire has imploded. Tesla's stock has crashed.
Tesla just continues to disappoint
by over 53%, wiping out hundreds of billions of dollars in market value. At the same time, Tesla's sales in Europe have collapsed by a staggering 70%.
Is this all because of Elon Musk's other activities, or have the sort of, first adopters already filled their garages?
Triggering panic inside the company and across Wall Street. But this disaster wasn't just a coincidence. It was Europe's revenge, a direct retaliation to Donald Trump's aggressive tariffs that pushed global trade relations to the breaking point. And Tesla was the first American giant to pay the price. What started as a political fight has now turned into the biggest crisis Tesla has ever faced. So how did Europe crush Tesla overnight? Why are investors fleeing? And is this the moment when Tesla's unstoppable rise finally ends? Let's break down exactly what happened. The shocking sales collapse. The European electric vehicle market was once Tesla's crown jewel. From 2018 to 2022, Tesla dominated the landscape, outselling competitors in Germany, France, and the Netherlands. European consumers flocked to Tesla showrooms, drawn in by sleek designs, superior technology, and the undeniable charisma of Elon Musk. But everything changed in the first quarter of 2025. Between January and March of 2025, Tesla's sales in Europe fell off a cliff. According to data released by Eurostat and confirmed by national vehicle registration agencies, Tesla's total vehicle deliveries in the European Union declined by more than 70% compared to the same period in the previous year. In Germany alone, once Tesla's largest European market, sales plummeted by over 73%. France reported a 66% drop, and in Italy, sales collapsed by over 70%. This wasn't a slow decline. It was a complete market rejection almost overnight. The reasons for this collapse were multi-layered but boiled down to one brutal truth. European consumers turned their backs on Tesla. Surveys conducted by European Auto Watch revealed that over 60% of former Tesla customers cited negative brand image and loss of trust as their primary reason for abandoning the brand. Rising prices due to Trump's tariffs, Elon Musk's controversial political remarks, and growing resentment toward American economic policies all fed into the backlash. Compounding this rejection, European automakers like Volkswagen, Renault, and Peugeot doubled down on their own electric vehicle offerings, slashing prices and expanding production. Meanwhile, Chinese manufacturers BYD and NIO aggressively entered the market, offering affordable alternatives without the political baggage. By March, Tesla's European market share fell below 5%, the lowest in over 6 years. Once hailed as the future of driving, Tesla had become the outsider in the very market it helped build. But the damage did not stop at the dealership lot. The sales collapse triggered a chain reaction that would soon tear through Wall Street. If you are still with us, hit like and subscribe so you don't miss the next plot twist. It's a wild one. How Tesla's stock lost over 50%. The collapse of Tesla's European sales was the spark, but what followed was a full-blown financial inferno. By the end of March 2025, Tesla's stock price had plummeted by 53% compared to its January high. Wall Street traders, investment banks, and long-term shareholders alike watched in horror as billions of dollars evaporated from Tesla's market capitalization. The numbers were staggering. On January 1st, 2025, Tesla's market cap stood at $770 billion United States dollars. By March 31st, that figure had plunged to just over $360 billion United States dollars, a loss of over $400 billion in shareholder value. This wasn't just a decline, it was a catastrophic collapse that wiped out years of financial gains. The sell-off was not driven by a single event, but by a cascade of negative factors. First, the European sales crash shattered investor confidence in Tesla's growth story. Second, Tesla's exposure to Trump's aggressive trade tariffs, which increased the cost of raw materials and production, raised fears of shrinking profit margins. Third, Elon Musk's increasingly controversial political statements and social media outbursts alienated both customers and investors. Institutional investors fled. Hedge funds unloaded millions of shares. Tesla's bonds were downgraded by 2 major credit rating agencies. Financial analysts across Wall Street slashed their price targets. with many predicting that Tesla's best days were behind it. By late March, the sell-off triggered margin calls and algorithmic trading systems to liquidate Tesla holdings, accelerating the crash. Small investors, many of whom had viewed Tesla as a once-in-a-generation growth stock, saw their savings decimated. The financial world's darling had turned into its disaster, and the man at the center of it all was not silent. In fact, his actions were pouring gasoline on the fire. The Musk effect. While Tesla's sales were crashing and its stock was burning, Elon Musk was busy adding fuel to the blaze. Throughout January, February, and March of 2025, Musk's public behavior and political interventions became a primary driver of Tesla's collapse in Europe. It began with Musk's vocal support of Donald Trump's new tariffs against the European Union and China. On multiple occasions, Musk took to social media to defend the tariffs, framing them as necessary protection for American innovation. These comments were met with immediate backlash in Europe, where many consumers already viewed Trump's economic policies as hostile. Musk's troubles didn't stop there. He made inflammatory remarks about European political leaders, calling them bureaucratic parasites and anti-innovation relics. In an interview with a U.S. news outlet, Musk even suggested that European environmental regulations were designed to punish Tesla. European media outlets ran headlines daily, painting Musk as arrogant, erratic, and disrespectful. The public response was swift. In Germany, protesters gathered outside Tesla's Giga Berlin factory, accusing Musk of exploiting local labor while disrespecting European policies. In France, consumer groups called for a boycott of Tesla vehicles, and local influencers took to social media encouraging people to buy European. The collapse in public image wasn't limited to Europe. Back in the United States, government officials were now openly questioning Tesla's viability. The government warning. In a press conference on March 25th, the Commerce Secretary declared, "We are concerned about the risks Tesla's leadership poses to American investors and our economic stability." The Secretary referenced Tesla's exposure to retaliatory tariffs, collapsing European sales, and Elon Musk's erratic political behavior as key risk factors. This unprecedented warning sent shockwaves through Wall Street. It marked the first time in modern history that a sitting U.S. official publicly questioned the financial safety of a major American company. Within hours, Tesla's stock fell another 6%. Institutional investors accelerated their sell-offs, and market analysts revised their forecasts downward once again. The message was clear. Tesla was no longer considered a stable pillar of American innovation. It was now viewed as a liability. The warning also triggered broader questions about Tesla's place in the American economy. If the government had lost confidence, what did that mean for Tesla's future partnerships, regulatory approvals, and market dominance? But this was only the beginning. As Wall Street panicked and European consumers abandoned Tesla, a much larger battle was brewing behind the scenes, one that would pull governments, global markets, and the entire electric vehicle industry into its vortex. The tariff trigger. The fuse was lit on January 3, 2025, when President Donald Trump signed a sweeping executive order imposing heavy new tariffs on foreign-made goods. Under the banner of protecting American manufacturing, these tariffs were designed to target imports from the European Union, China, and Canada. Trump claimed it was a necessary move to protect American jobs and industries from unfair competition. But buried beneath the headlines was a clear casualty: Tesla. The tariffs specifically targeted electric vehicle components, raw materials, and assembled vehicles imported from these regions. Lithium batteries, cobalt, nickel, aluminum, and steel, all critical components in Tesla's supply chain, suddenly became significantly more expensive overnight. The tariffs added up to 25% on certain imported car parts, and as high as 35% on select vehicles. European automakers felt the heat, but no American brand was hit harder than Tesla, which had long relied on global suppliers to sustain its razor-thin margins. Trump's rhetoric at the signing ceremony was fiery. He framed the move as standing up to foreign powers exploiting America. But in reality, Tesla stood directly in the crosshairs. Elon Musk's company had worked tirelessly to build relationships and supply chains in Europe and China to support its global ambitions. That strategy was now under siege. The immediate financial impact on Tesla was devastating. The company's procurement costs soared, forcing Tesla to either absorb the losses or pass them on to consumers through higher vehicle prices. Either choice was a losing proposition in an increasingly competitive electric vehicle market. As tensions escalated, Asia entered the fray. China and South Korea, two critical markets and manufacturing partners for Tesla, retaliated swiftly and strategically. The Asian backlash. China was the first to respond. Already wary of Trump's trade war rhetoric and Musk's political alignment, Beijing announced increased tariffs on American electric vehicles and automotive parts. The tariffs, ranging from 15 to 30%, directly affected Tesla's exports to China. In addition, Chinese regulators quietly increased scrutiny of Tesla's Shanghai Gigafactory operations. New environmental compliance audits and labor inspections were launched, slowing production and raising operational costs. But China's retaliation didn't stop there. State-owned media outlets ran critical stories questioning Tesla's data security practices and reliability. Chinese social media platforms were flooded with campaigns encouraging consumers to buy local brands like BYD and NIO instead. Government agencies began favoring domestic manufacturers in fleet purchases, cutting Tesla out of lucrative contracts. South Korea soon followed suit. Seoul imposed new tariffs on American auto imports, including electric vehicles. Like Europe, Korea also introduced non-tariff barriers, such as stricter safety inspections and battery certification protocols aimed squarely at Tesla. These moves were devastating. Together, China and South Korea accounted for a substantial portion of Tesla's international sales and production capacity. As trade tensions deepened, Tesla's access to these markets became increasingly restricted, and consumer sentiment turned sharply against the brand. And while Tesla scrambled to deal with collapsing sales and rising costs abroad, a more dangerous threat was quietly growing at home, one that would unravel the very foundation of its global operations: the manufacturing trap. By the middle of 2025, the real consequences of Trump's trade war strategy became unavoidable for Tesla. Beyond the plunging stock price and collapsing sales, the company's global manufacturing machine was grinding to a halt. Tesla's business model depended on an intricate web of international supply chains. Lithium from Australia, cobalt from the Congo, nickel from Indonesia, semiconductors from Taiwan and South Korea, battery packs from China, and assembly plants in Germany and the United States. Tesla's success was built on this seamless global network. Trump's tariffs shattered that network. The cascading tariffs and retaliatory measures forced Tesla to pay significantly higher prices for virtually every component needed to build its vehicles. Steel and aluminum costs surged due to Canadian and Chinese tariffs. Battery production costs soared as raw material imports faced new levies. Semiconductor shipments were delayed by South Korean customs inspections. Each disruption added delays, expenses, and logistical headaches. The company's attempt to shift production to its American plants backfired. Domestic factories were already operating near full capacity and could not quickly absorb the lost output from Europe and Asia. Worse yet, the increased cost of materials, labor, and compliance wiped out the cost advantage of manufacturing in the U.S. By the end of the second quarter of 2025, Tesla's supply chain was in crisis. The dream of a global, seamless electric vehicle empire had unraveled in the face of geopolitical warfare. The very trade policies meant to protect American industry had left one of America's most iconic companies crippled. But while Tesla struggled to survive this economic siege, the cultural and political backlash brewing across America was about to ignite an even deeper crisis: the protest wave. By the spring of 2025, the backlash against Tesla had erupted far beyond Wall Street trading floors and corporate boardrooms. Across both Europe and the United States, a powerful wave of protests surged in the streets, with crowds rallying outside Tesla showrooms, factories, and even delivery centers. What began as online outrage over Elon Musk's divisive political statements and the fallout of Donald Trump's trade war quickly materialized into organized, boots-on-the-ground demonstrations. In major cities like Berlin, Paris, and Madrid, demonstrators gathered holding signs that read, "No more Musk madness," and "Stop selling our jobs." Protesters accused Tesla of being complicit in a new wave of economic nationalism, triggered by Trump's tariffs and exacerbated by Musk's controversial political interventions. In America, protests took on an even more personal tone, with unions and factory workers staging walkouts, arguing that Musk's leadership had turned Tesla from an industry disruptor into a political pawn. The demonstrations weren't isolated to urban centers. Smaller, localized protests flared up near Tesla factories in Nevada and Texas, driven by workers frustrated over wage stagnation and management's silence on the tariffs' impact. Across Europe, consumer advocacy groups joined environmental activists in denouncing Musk's political entanglements and Tesla's growing list of controversies, ranging from safety violations to union-busting tactics. This groundswell of public anger wasn't just about tariffs or declining stock prices. It was about betrayal. For many, Tesla had once symbolized the future: clean energy, American innovation, and the promise of a greener, more ethical economy. But Musk's erratic behavior and the geopolitical consequences of his actions had shattered that image. The protests sent a clear message. The public's patience with Tesla and with Elon Musk himself had run out, and while demonstrations raged in the streets, the media was preparing to deliver its own blow to Tesla's crumbling reputation. The reputation crash. As the protests intensified, the media narrative around Tesla underwent a seismic shift. Once the darling of financial analysts, tech enthusiasts, and environmental advocates, Tesla's image collapsed in a matter of weeks. Major news outlets, tech blogs, and social commentators that had spent years praising the company's innovation now turned their attention to its unraveling. Headlines that used to celebrate Tesla's latest milestone now ran with phrases like "the fall of an icon" and "Tesla's toxic brand." Coverage zeroed in on Musk's political entanglements, painting him as a reckless billionaire more concerned with Twitter fights and ideological feuds than with building reliable, affordable electric vehicles. News networks highlighted the protests outside Tesla showrooms and tied the demonstrations to deeper societal frustrations with corporate overreach and political interference. Even consumer watchdogs and industry analysts joined the pile-on. Reports surfaced detailing rising safety complaints, quality control issues, and worsening customer service experiences. Tesla's reputation for cutting-edge technology and cool, future-forward design was now overshadowed by allegations of corporate greed, political recklessness, and a deteriorating product. The media had effectively transformed Tesla from a cultural hero to a corporate villain. But the real damage wasn't just in perception, it was in consumer behavior. The public backlash soon evolved into something far more tangible: a mass exodus of Tesla customers. Why buyers chose Volkswagen and Hyundai instead. The collapse of Tesla's reputation soon translated into hard numbers. Throughout the first half of 2025, Tesla's sales figures in Europe and North America painted a bleak picture. Longtime loyal customers canceled orders, showroom traffic plummeted, and Tesla's once booming referral program flatlined. Competitors wasted no time capitalizing on the chaos. Volkswagen, Hyundai, Renault, and Kia all aggressively ramped up their electric vehicle marketing campaigns, specifically targeting disillusioned Tesla customers. European automakers emphasized their commitment to sustainability, stable leadership, and affordable pricing. Meanwhile, Korean manufacturers touted their superior warranties, reliable service networks, and growing domestic production footprint. The exodus was most visible in Germany, France, and the United States Midwest. In these markets, Tesla's market share shrank by nearly 70% compared to the previous year. Buyers who once considered a Tesla the pinnacle of status and innovation now opted for the Volkswagen ID.4, Hyundai Ioniq 5, or Kia EV6, all brands seen as less politically charged and more consumer-friendly. Surveys conducted by independent firms confirmed the shift. When asked why they abandoned Tesla, former customers cited three primary reasons: political controversies, declining product quality, and the company's perceived disregard for public opinion. Price cuts and promotional campaigns by Tesla did little to stem the tide. For many, the damage was done. The brand they had once admired now felt toxic. The consumer shift wasn't just a short-term problem. It signaled a long-term erosion of Tesla's core customer base. But while buyers walked away in droves, the company faced an equally dangerous crisis from within its own walls: the internal chaos. Behind the headlines and public protests, another rebellion was quietly brewing inside Tesla's factories and corporate offices. Disillusioned employees, from line workers to senior engineers, began to question whether they could continue working under Elon Musk's leadership. The signs of internal collapse were everywhere. In Nevada and Texas, labor organizers reported a surge in unionization efforts at Tesla's factories. Workers cited unsafe conditions, rising production pressures, and stagnant wages, all exacerbated by the company's declining financial position. In Europe, Tesla's Gigafactory in Berlin became a flashpoint for labor unrest. Employees staged walkouts, citing unfair treatment, broken promises, and concerns over the company's future. Even at Tesla's Palo Alto headquarters, the cracks were showing. Several high-level executives and engineers resigned or publicly criticized Musk's leadership. Whistleblower reports surfaced alleging a toxic workplace culture, rampant favoritism, and a lack of strategic direction. The root cause of this internal chaos wasn't just the financial turmoil or the media backlash. It was a deep sense of betrayal. Many employees had joined Tesla believing they were part of a mission to change the world. But as Musk's political antics took center stage and the company's brand unraveled, that sense of purpose evaporated. By the summer of 2025, Tesla faced not only a collapsing stock price and a vanishing customer base, but also a workforce in open revolt. But the fallout isn't stopping there, because Wall Street's biggest players are starting to flee as well. The Wall Street exodus, the tremors of Tesla's collapse in Europe, were not confined to the borders of the continent. They rippled across the Atlantic, shaking confidence in Tesla's financial stability and triggering an unprecedented exodus of big money investors on Wall Street. Tesla, once the darling of institutional investors and hedge funds, is now watching its strongest financial backers dump their shares at record levels. The sell-off began quietly, but rapidly gained momentum after the European market crash in early 2025. As Tesla's sales plummeted in Germany, France, and other key markets, institutional investors began reevaluating the company's long-term growth prospects. Major investment banks, including Royal Bank of Canada and Morgan Stanley, downgraded Tesla's stock, citing not only sales declines, but also the unpredictable political environment surrounding the company. The Commerce Secretary's warning about Tesla's stock being too risky accelerated the panic. Pension funds, mutual funds, and sovereign wealth funds began offloading billions of dollars worth of Tesla shares, triggering a further collapse in the stock's value. By mid-March of 2025, Tesla's market capitalization had fallen by over 50% since the start of the year, a loss of more than $300 billion. Wall Street's decision to abandon Tesla wasn't based solely on short-term sales data. It was a strategic shift away from a company whose future appeared increasingly unstable. Elon Musk's polarizing behavior, mounting political backlash in Europe, and the financial impact of Donald Trump's tariffs all combined to erode investor confidence. Analysts warned that Tesla's once unassailable brand was now damaged, its global supply chain compromised, and its margins shrinking. For the first time since Tesla's meteoric rise, institutional investors questioned whether the company could maintain its leadership in the electric vehicle industry. The sell-off wasn't a knee-jerk reaction. It was a coordinated retreat. Hedge funds rebalanced their portfolios. Pension funds redirected their capital to safer, more stable investments. And Wall Street insiders began whispering that Tesla's golden age might be coming to an end. But it wasn't just Wall Street's reaction that spelled trouble, because as the financial giants pulled out, the entire global electric vehicle market was about to realign, and Tesla was losing its grip. The global trade realignment. Tesla's unraveling isn't just a localized crisis. It's part of a larger global shift in the electric vehicle market. The combination of Trump's tariffs, Europe's retaliation, and Musk's political controversies triggered a seismic realignment of the industry, and Tesla is no longer at the center of it. While Tesla struggled with collapsing European sales and Wall Street panic, competitors seized the moment. Chinese brands like Build Your Dreams and NIO ramped up their expansion into Europe, taking advantage of the political backlash against American companies. In Germany, France, and Norway, these brands offered affordable, high-quality electric vehicles that European consumers eagerly embraced. European automakers also tightened their grip. Volkswagen, Renault, and Stellantis capitalized on new tax incentives that favored domestically manufactured electric vehicles. They used the political fallout to strengthen their market share, offering models tailored to European tastes and regulations. Meanwhile, Tesla's factories faced operational challenges, higher costs, and reduced demand. The trade realignment went beyond Europe. In Asia, South Korea and China imposed retaliatory tariffs on American electric vehicles, further squeezing Tesla's margins. Canada introduced new import restrictions, and emerging markets shifted their attention to regional competitors. By the end of the second quarter of 2025, Tesla's global market share had fallen to its lowest point since 2016. The company's growth trajectory, once the envy of the automotive world, had flattened. And yet, the final question remained unanswered. Was this just a temporary setback or the end of Tesla? Is Tesla's golden age over forever? As the dust settles on Tesla's catastrophic year, investors, analysts, and consumers are left grappling with one question: is Tesla's reign as the king of electric vehicles over for good? The numbers tell a grim story. Tesla's global sales are down over 50% year to date. Its stock price has lost more than $300 billion in market value. The European market, a cornerstone of its international strategy, has collapsed. Institutional investors have fled, and global trade partners have rewritten the rules in ways that favor Tesla's competitors. Can Tesla recover? The answer depends on a series of critical factors. First, Elon Musk will need to repair his relationships with foreign governments and re-establish trust with consumers. Second, Tesla must adapt its production strategy to a world where protectionism and geopolitical risk dominate economic policy. Third, the company must reignite its innovation engine, offering new products and technologies that can recapture market enthusiasm. But even if Tesla achieves all of this, the damage may already be done. Once loyal customers have found alternatives, once supportive investors have moved on, and Tesla's ability to dictate the future of electric vehicles is now in serious doubt. If you've made it this far, you know this story isn't just about Tesla. It's about how fast everything can collapse when politics, money, and global power collide. So what do you think? Can Tesla bounce back, or is the damage permanent? Drop your thoughts in the comments below. We want to hear from you. And if you want to stay ahead of these massive economic shocks, hit that subscribe button and like this video.